All right. Good morning, everybody. Good afternoon, depending on where you're tuning in from. Welcome to our weekly mobile coaching stream. My name is Patrick France, Senior Instructor here at VectorVest. Glad to be with you all. Hopefully, you guys are doing well. Hopefully, you guys are having a good morning so far. If you guys can hear me, let's see some VV Nation showing up in the chat. Type it in there. We should be good both on Facebook and on YouTube. Just double checking the Facebook side since that's always where we seem to have issues at. Taking a second to load. All right. All right, there we go. Hey, Albert, hopefully you're doing well. I see a few people already chiming in. Good morning, Jay. Good morning, Mark. Hopefully you guys are doing well. Waiting for everybody to get in here this morning. Should have our notification going out any moment now. Also, we should be live both on Facebook and on YouTube once again. Just double checking to make sure all that's working. Let's see, where's it at? Alrighty, we'll just have to wait and see for YouTube or for Facebook to catch back up. All right. So with that, once again, welcome everybody. This is our weekly mobile coaching stream where we talk about the VectorVest Stock Advisory app. If you're brand new here and not familiar with it, the VectorVest Stock Advisory app is by far the most comprehensive trading app to allow you to manage your portfolio on your own quickly and efficiently. So what we're going to be doing here talking about today is talking about some of the benefits and seeing how easy it is to really put the VectorVest system into practice. So that way you can see how fast it can make your trading by getting the information that you can actually use and not just giving you a lot of data that you have to analyze on your own, which takes hours to try to digest. So we're going to be covering some of the basics here today, but really focusing on what the indicators are, what they're telling us, and how to get the most out of it. So that way it can make your decision process on any stock out there faster and easier than anywhere else out there as well. So everything looks to be working now both on the Facebook and YouTube side. So there we go. That should be good. If you're over on our Facebook page, say hi. Also, if you're over on our YouTube page right now, make sure, as always, smash that like button if you're here for the first time or if you're just getting in here. All that helps us out and shows your support for the streams and doesn't cost you a thing. So if you guys want to see these streams going forward, make sure smash that like button. And if you're not already subscribed to the YouTube channel, hit that red subscribe button, turn on notifications. That way you get updated on all the live content we have coming out for you on a weekly basis. So with that, let's go ahead, dive right into what's going on right now. Then we'll talk about our topic here for today. And then as always, we'll finish off with the fan favorite of analyzing any stock that you want to take a look at in less than 10 seconds. So if you want to see your stocks analyzed, make sure to stick around towards the very end and we'll get those analyzed for you. Ingrid, good morning. Hopefully you're doing well. All right, so taking a look right here at the very top of the VectorVest Stock Advisory app, as we can see, the Dow is actually coming back a little bit, down only 0.1%. NASDAQ's only down about 0.6%. S&P 500 down about 0.1%. The VectorVest Composite down about 0.2% so far for the day. Even with the red across the board on all the major indices, if you look at the market timing gauge, as we can see, we are one tick into the green currently, so therefore the market is mildly bullish, and VectorVest advocates buying safe, undervalued stocks that are rising in price at this time. As always, if you ever want to see an update or what's going on in the market on a nightly basis, make sure to check out the daily color guard report where we recap every single day what happened today, what to expect for tomorrow, what news you need to be aware of, what headlines are making an impact on tomorrow's trading, so that way you can be prepared in as little time as possible there. And then if we scroll down, taking a look at the color guard, well, we're bouncing around right now from one green light down to three yellow lights. So we're going to be seeing us teetering here, it looks like, here today. Right now, we're back to 3 yellow lights. If we look at the price, we can see that we are higher than we were compared to 5 trading days earlier, but the price is still lower when compared to yesterday. So therefore, we have a yellow light with that. Looking at the RT, we're flat on a day-over-day basis, but lower on a week-over-week basis. If we see the RT picking up a little bit more, we could see that turn back to green here. And looking at the buy to sell ratio is just right on that edge of turning green here today. Buy to sell ratio is looking at the overall health of the market. And it's looking at the number of buy rated stocks in a database and comparing it to the number of sell rated stocks in a database. So if the buy to sell ratio is above 1, that would indicate more buys and sells in a database or overall market strength. But since it's below 1, that shows more sells than buys in a database or overall market weakness still. But if we can see the buy to sell ratio pick back up just a little bit here, we could see that moving higher day over day and week over week, giving us some positive underlying signs here of what's going on in the market. After that, we then take a look at the MTI, and the MTI is looking at the underlying trend of the market. Now it's cast on a scale of 0 to 2, and above 1, the underlying trend of the market is up. Below 1, the underlying trend of the market is down. As we can see, for the first time in quite a while, the MTI did just cross above that level of 1 as of today. Therefore, the underlying trend of the market has now turned from down back to up. And once again, it's the first time it's happened in a very long time here. So good to see those signs turning positive here today, especially on a negative news day. Last but not least, we'll finish off with the calls column, which stands for our confirmed calls. And as always, our confirmed calls are our last signal to get into the market and our last signal to get out. Therefore, we never want to ignore a confirmed call change. As we can see, we still remain in that confirmed down situation as of right now. So last but not least, last thing we want to take a look at here on the homepage is the advanced declines. Now, as we talk about every single week, when we see the advances and declines, it's showing the number of stocks moving higher for the day compared to the number of stocks moving lower for the day. So when we're looking at it, we typically prefer to see a 2-to-1 bias. What I mean by that is if we're looking for, a day to be buying stocks, we want to see twice as many stocks advancing than declining. And if we're looking for a day to play the market to the downside, then we want to see just the opposite. So we want to see twice as many stocks declining than advancing. So right now we're sitting at about 39% of stocks moving higher for the session and about 48% of stocks moving lower for the session. Therefore, not meeting that 2-to-1 bias that we like to see, telling us right now, probably just be patient, hold off a little bit, wait for this to develop a little bit better. All right, so with that, let's go ahead and jump right into our topic of discussion here today. So what we're going to be doing is we're going to be talking about the VectorVest indicators and how to get the most out of them. So while I'm getting into that right now, if you guys have specific, a stock or two that you want to see analyzed, throw that out into the chat. We can use that as some of our examples. But what we're going to do, starting off with at least, is going down to the stock pick ideas and taking a look at the overall top rated stocks. Now, these are the top VST stocks, or if you're on the desktop, you can find these in the stock viewer. But we're going to use some of these as our example for today and get familiar with the indicators to see, how to really use this so that way you can make an informed decision in less than a minute or so, especially even if you're just getting started with it. So starting off, we'll take a look at CLFD or Clearfield. And the very first thing that we take a look at is right below that little mini graph that you have at the top. We have these 4 indicators here at the bottom. Now, if we click on the stock analysis report button right below there, hey Drew, glad to see you. Hopefully you're doing well. This will be a written out detailed description or detailed version of everything you were just looking at on the previous screen. So at the very top of the page, you get a business description, just talking about what the company does, where its headquarters is, just giving you a little insight about who that company is. But then as we scroll down, we get the recommendation, we get the value, which we talk about. And this is really where we can start off with. Now, the value is what we currently feel the stock is worth. And the way we use that value is compare the price of the stock to its value. So for VectorVest recommendation, we advocate to buy safe, undervalued stocks that are rising in price in a rising market. Well, as you can see with this one, the current value is at 53.60. The current price is at 83.05, telling us that this stock is overvalued since the price is over its current value, therefore meaning that you're paying a premium to own this stock at this time. So if you're somebody who likes to get a bargain, this would probably be one we just simply pass on, move on to the next one if you're looking for a stock to be buying. Or if this is a stock, let's say your buddy told you about and you wanted to check it out, see what it was really worth, see how it's doing. This could be a great way to see if, right now you're getting a deal on that stock or if you're going to be paying more than you probably should. If we come down here, the next one we're going to be talking about is relative value, or the RV. Now, the next four indicators we're going to be looking at are all cast on a scale of 0 to 2. And above 1 is good and below 1 is bad. We talk about it week in and week out. So what we're looking at here is above 1 to closer to 2, the better. Below 1 to closer to 0, the worse it is. So we start off with the RV, or relative value, which is looking at the long-term price appreciation potential of the stock compared to AAA corporate bonds. So what that means is when you see, for example, CLFD has an RV of 1.59, that's telling us we expect to see this stock outperform a AAA corporate bond or a relatively safe investment by roughly 59% over the next 1 to 3 years. So while you don't need to worry about getting, caught up in those fine details, once again, just stick to the 0 to 2 scaling. Above 1, the better. Below 1, worse. Next one we're looking at is the RS, or relative safety. Now, this is looking at the amount of risk involved in the stock. The way it's doing that is by taking into account the company's current financial documents, current financial performance, looking at business longevity, price volatility, debt to equity ratios, sales volume. So it's really analyzing a balance sheet of the company and summarizing it all into a simple to understand indicator. Now, if you're somebody who, let's say just got started with it or just starting to get in the market, or you're somebody who's been analyzing, balance sheets for years, when you look at a stock, you know that it can take a very, very long time. Well, we look at this, that does all of that work for us, and it takes a second or two just to simply look at it and see it's above that level of 1, knowing that their current financials are strong, and that indicates less risk associated with it compared to other stocks out there. Then last but not least, the next indicator we're going to look at is the RT, or relative timing. Now, this is looking at more of the short-term price trend. So this is more of a technical indicator, if you will. Since it's cast on a scale of 0 to 2, above 1 to closer to 2 it is, the stronger the uptrend. Below 1 to closer to 0 it is, the stronger the downtrend. Now, unlike other technical indicators, it's not just looking at, price direction. It's not just saying, hey, the price is going up, or hey, the price is going down. But it's also indicating the magnitude of that move as well. So if it's on a parabolic climb, basically shooting off to the stars, you would expect to see that RT value being closer to 2. Now, if it's basically just moving sideways or slightly up, a slow and steady stock, then you'll see that RV closer to 1, but maybe 1 to 1.2 or so. This is why when I say, time and time again, I like to see stocks that I'm going to potentially get into have an RT above 1.1. This is why, is because I don't want it just to be channeling sideways. I want it to have a nice, consistent uptrend. So that's why I look at 1.1 or higher there. And then VectorVest takes all three of these indicators. So 2 fundamental indicators, 1 technical indicator, and combines it all into one easy to understand indicator, and that is the VST, or value, safety, and timing. Something you're not going to find anywhere else, nowhere else out there. I've used tons of different other services. I've looked at tons of different other newsletters, everything out there. Nothing takes the power of both technicals and fundamentals and combines them in such a simple way like the VectorVest Stock Advisory app does. So, if you're looking just for a real quick snapshot on the overall, 30,000 foot view, if you will, of the stock, simply just looking at the VST will give you a lot of insight in a very, very quick period. So once we understand these indicators, we understand what they're looking at, we can then utilize that information to help make those decision processes a lot easier. And that's why we wanted to talk about it today, because, especially if you're brand new to the VectorVest Stock Advisory app, you see these, you get a basic definition, you have an idea of what they are, but if you don't truly get these indicators or don't truly understand all the data that it's collecting to come up with these indicators, then you really don't understand the full power. And then, you may second guess, or you may look other places and get different opinions. Whereas, this is all just simply looking at data. And when you add in personal opinion, that adds in emotion. And as we talk about, you don't want to have emotions in your portfolio. Lou's coming in. Good morning, Lou. Hopefully you're doing well. Don't forget, in a recession is day traders territory. Stocks go up in the morning and profit taking in the midday. Be careful buying stocks long term. Is on hold in my account. Yeah, I mean, we just got that news today. 2 consecutive negative GDP quarters, putting us into a recession. Technically, if you want to go with that. So yeah, I don't think anybody was surprised. You already saw, the positioning or attempt to position themselves at the beginning of the week. Everybody kind of expected this second quarter to be negative. So therefore, by definition, we are technically in a recession. And if you're worried about that, you're worried about the market continuing to move lower, go check out a video that we published on Monday talking about 4 tips of knowing when to sell. Those tips should be able to help you guys all out and help avoid getting caught in a significant downturn if that's, what you're worried about coming in the near future. Let's see what else we have. Hey, Fernando, hopefully you're doing well. All right, cool. So I think I got caught up. You guys just talking with one another. That's fine. All right, so after that, the next thing we want to take a look at is the stop price. Now, the stop price is something that doesn't get talked about too much here during our live streams, so we just want to re-familiarize everybody with it. And the reason why is because the stop price is like our final line in the sand. Basically, it's based upon a 13-week moving average, so a relatively conservative moving average that's adjusted for the company's fundamentals. So what I mean by that is if the company has a good RV and RS rating like we see here with CLFD, then, oh, whoopsies, accidentally fat fingered that one. Let's go back into it. So if it has good fundamentals like we see here, strong RV and an RS score, we'll lower that 13-week moving average down to give that stock more wiggle room before that stop price is met. Now, if it's an aggressive stock, one with poor fundamentals, let's say a speculative play, then we'll move that stop price closer to the current price to trigger that or to hit that stop price quicker. The reason why we do that is because the stop price is what we use to generate that sell rating on a stock. So therefore, if you're holding any stocks in your portfolio and they were buy rated or maybe, right on the border of buy to hold, and all of a sudden you come in one day and you see it has a sell rating, that is our final warning telling you that you either need to sell now or hold at your own risk. Most likely, most people in here will be out well before it ever gets to that stop price if you're using basic money management rules or following those 4 tips that we just talked about. But, this is a great, backup plan, if you will. So let's say you have your plan in place, you're following the rules, you're following your stop criteria, and then all of a sudden something happens, get away from it or keep your eyes off of it for a day or two, come back, see it's met or below that stop price or has that sell rating. That's that clear warning telling you, hey, if you haven't already done something, this is your final chance to do something now, or else proceed at your own risk. So when utilizing that information, especially when you combine it with the market timing, this can help manage your portfolio in matters of minutes or seconds even, rather than taking hours. So let's go back here, go on to the next one, and use this now as an example. So once again, we see those 4 indicators. This time we're more acclimated with them. We understand what they're looking at. So we're not too worried about, going into the stock analysis report. Once you get familiar with them, you can say, okay, looking at CPRX, for example, this stock should outperform a AAA corporate bond by roughly 43% over the next 1 to 3 years. That's good. This stock has consistent fundamentals, so meaning it's outperforming its earnings, it's growing its earnings quarter over quarter, year over year consistently, also has good business longevity, so this stock has less risk with it. This stock, looking at the timing, 1.84, above 1 tells us that it's in an uptrend. At 0.84, 1.84 tells us it's in a really strong uptrend. So that checks out. Overall, stock is definitely favorable. Now, this would take you from everything that we just discussed and those 4 indicators to try to come up with that on your own by, going through the financial statements, looking up current AAA corporate bond rates, analyzing their bonds, looking at the price trend, analyzing the graph. All of that on your own would literally take hours. I know because I've seen it firsthand. But you just saw it in about 30 seconds, going slowly through it, 30 seconds, and our decision process is made. So let's assume, we go back to the overview page or the home page, we see the market is mildly bullish, and VectorVest advocates buying safe, undervalued stocks that are rising in price at this time. Well, when we just went and looked at that last stock, CPRX, this stock is safe. This stock is rising. The market is rising. Looking at it, it's currently fairly valued. So therefore, you're paying the current market price for it, not getting a bargain, but not getting a discount or not overpaying for it. So that's good. So therefore, yeah, this meets the criteria. This is now, if you're wanting to get into a stock based off the market timing, based off what we're seeing here, this would be a good time to be getting into it. So all of that, matter of minutes. It literally is a full-on trading plan and step-by-step guide to how to use VectorVest to help save yourself ample amounts of time. This way you can get out there and do things you'd probably rather be doing rather than stuck analyzing your portfolio or managing your portfolio, throughout the day or every single night there. All right, so taking a look at that one, we saw that it's fairly valued. Looking at ACLS, this is another one. Good long-term potential, so outperforms a AAA corporate bond over the next 1 to 3 years. Less risk, telling us the balance sheets or the financial statements are good. Really strong short-term uptrend. So yeah, this stock is favorable. If we scroll down, this stock is also undervalued. 66.17 is the current price. It's valued at 82.90. Therefore, you're getting a pretty decent bargain on this stock, and it's following all the guidance that VectorVest has been given. Salim is saying, what I have a hard time with looking at CPRX is, to me, it seems like it's too late to get in now. How do you know it will continue to rise and aren't buying at the peak's price? So going back to it, CPRX. So to be completely honest, nobody has any crystal ball saying what point this stock will reach its peak and what point it'll start to sell off at. So, unfortunately, if somebody had that, then everybody would be following that and everybody would be nailing the exact bottom, exact top on every single trade. But we know that doesn't happen. So that's why we use money management rules such as stop criteria, setting a percent gain loss, using trailing stops, whatever it may be, or using those 4 tips of knowing when to sell that we talked about in the video we put out on YouTube last Monday or this previous Monday. We could use those to help, avoid the big downfalls, because if you can, cut your loss quickly on a position and you have proper money management, having a losing trade isn't the worst thing. Everybody's going to have them. Even the best trading systems out there don't win 100% of the time. They only win, I think, 70% if I recall correctly. So even, the algorithm trading only wins about 70% of the time. The thing it comes down to is proper money management, staying disciplined, following your plan that you have in place. And as long as you're doing that, then, yes, you may have a few losers, but you cut your losers quickly, and the winners that you have will outperform or keep your portfolio moving higher, even with a couple of losers. So that is why we teach not only, picking stocks, but also how to manage a stock as well. So we look at the chart, and that's the thing. There's over 9,200 stocks in the US market. If you're not comfortable with what you see with, let's say, CPRX, move on. It's as simple as that. I've said it since day one that I started working here. When I started working with customers one-on-one, if you're spending more than 30 seconds looking at a chart and you are still looking at it and haven't made up your mind at that point, most likely you're trying to find a reason to buy that stock rather than having the stock sell itself to you. So with that, if you're not comfortable with that, with, let's say, how much it's gone up already, move on. Once again, CPRX was fairly valued. Move on to the next one. ACLS, it's undervalued, meets all the same criteria. Taking a look at it, you have a level of resistance right at that previous high. Where does it come in at? 67, let's call it. Looks like it's trying to break through that resistance right now. So you could use that. If you wanted to use the power technical analysis to help get a better sense of it, you could use that as well. But all of that comes down to what your trading plan is. So if you're not comfortable with that first one because it was at a high right now, move on. Don't settle for a stock. Be picky. Find the one that really suits you best. If you're comfortable with getting into it, then at that point, let's state it this way. If you're not comfortable getting into it, if you see that and it makes you a little worried about it and you do decide to get in, what's going to be driving your portfolio? Emotions. And what do we talk about week in and week out? Don't allow emotions to control your portfolio. Stay disciplined. So therefore, only buy the stocks. Let's say you're going through the top 30. I'm sure out of the top 30, you could probably find at least a handful of stocks that would be of interest to you. Only select the ones and only get into the ones that you're comfortable with, because that way you're less likely to allow emotions to start trading for you rather than sticking to your plan. You're less likely to have emotions start getting into your trading plan, which allows you to stay more disciplined. That's the best way of stating that there. Moving average are a good indicator to get in and out. Yeah, you could use moving averages. We've talked about that time and time again as well. Moving averages are great. Help as well as everything. That's true. Match Kate Ball, back up the truck. Yeah. We'll drop to around $9. I'll wait, and that's fine. Once again, if you're not comfortable with that, if you think $9 is going to be the floor, well, go back, tap on that little bell icon, set yourself an alert for when it breaks $9. That's what the alerts are for, folks. Take advantage of them. Make your life simpler. My life motto is work smarter, work smarter, not harder. And take advantage of this so that way you can follow that motto as well. Jay, don't talk about that. We don't talk about that here. All right, so hopefully that helps. Helps you guys understand what the indicators are really trying to tell you, because it's great we talk about them week in and week out. It's great knowing above one is good, but when you truly understand what they're looking at and the information they're taking in, that gives you a lot bigger, a lot more of an advantage, because you have a better idea of which aspects to look for. All right, so ACLS, we've talked about that one. SIGA, good long-term potential, does have less risk compared to the average stock out there, but the timing is at 2.0. When you see stocks like that, that tells us it's definitely a momentum play currently. If we look down here, the stock is also overvalued. So therefore, if you're not a momentum trader, stay away from it. Simply move on. If you're somebody who can take advantage of these, 16 to 10% up days, have fun with it. That's fine. But, trade with what you're comfortable with. Don't get into stocks that you're not comfortable with. Going on to the next one, CCRN. Good long-term potential, a little bit better safety compared to the average stock out there. Once again, though, RT at 1.73, pretty strong uptrend still. Looking at it, it is undervalued, but if you're not comfortable with some of the big swings that it's had, move on. CELH, good long-term potential, less risk associated with it, still a really strong uptrend. Overall, the stock is favorable. However, it is grossly overvalued. If you're not comfortable paying more than what the stock should be worth right now, once again, move on. Buy what suits you. Everybody is different. And there's, probably close to 100 people in here right now, at least. And I'm sure we could look at a basket of 30 stocks or 100 stocks, and everybody would pick a different stock. You may have a couple of people picking the same stock, but for the most part, everybody's going to be looking for something that suits them. Same applies here. Just because a stock is at the very top doesn't mean that's the best stock for you. That's the best stock based off the analysis, but we're looking at the top 30 of almost 9,000 stocks. So these are all going to be great candidates to keep an eye on. So therefore, buy what suits you. I'll leave it at that. All right. So if you guys have any other questions or any other, suggestions on what you're looking for here, want more understanding of a certain indicator, feel free to let me know in the comments or in the chat. Also, if you guys have stocks that you want to take a look at, make sure to put those in right now as well, and we'll go ahead and start analyzing your guys' picks here today. And while you're doing that, since you're going to be at your keyboard, if you haven't already hit that like button on today's stream, go ahead and do that. Once again, all of that helps us out, doesn't cost you a thing. So if you guys like these and want to continue to have these live streams going on a weekly basis, talking about the stock advisory app, make sure to show your support by smashing that like button there. All right. And Cody's coming in with the first stock. Watt. Let's go take a look. WATT. So looking at Watt. Poor long-term potential. A lot of risk associated with it. You are in a slight uptrend, but not enough to offset the amount of risk. Therefore, stock is not favorable currently. Now, at 1.19, that is pretty weak. It does have a decent day-to-day, but, if you're looking for a momentum play, I would look for higher RTs personally. GME, let's go take a look. GameStop, down about 1% today. But this one, a little bit more risky. It is a more speculative play. I think we can all agree with that. Poor long-term potential. You do have more risk associated with it. However, you do have a short-term uptrend starting, but not enough to offset the amount of risk. So therefore, as a prudent investor, you'd be holding off on it for right now. If you're a speculative trader, this may be one you keep on your radar. Tesla, TSLA. TSLA. Good long-term potential, less risk associated with it. You're in a nice steady uptrend. So overall, stock is favorable here. Hey, Mike, hopefully you're doing well this morning. Hey, Jim, glad to have you here as well. Let's see. Ford. Taking a look at Ford. Good long-term potential, but it does have more risk compared to the average stock out there. It is in a steady uptrend. So overall, stock's about average, slightly favorable. EXROF. Extro, poor long-term potential, a lot of risk associated with it. You're in a steady decline, so overall the stock is not favorable. Hey Chris, hope all is well. Hopefully you're doing well today as too, Chris. Analyze SIGA, sure, we'd be glad to. Let's get Mike's in real fast. He wants to take a look at Apple. Apple, good long-term potential, less risk associated with it. You're in a steady uptrend. Overall, stock is definitely favorable here. FBP, good long-term potential, less risk associated with it, steady short-term uptrend. Overall, stock is favorable. Scrolling down, also stock is undervalued. And then SIGA, good long-term potential, a little less risk than the average stock out there. It's timing though. This is a momentum play, as we discussed a little bit ago. SIGA is clearly a momentum play. If you're not comfortable with the amount of or the rate of speed that this thing can shoot off or also drop, stay away from it. But if you're somebody who likes trading, let's say a day trader or a very aggressive, very short-term swing trader, you may take advantage of these bigger swings that it can have. But once again, if you're not, stay away from it. Also, Cody, if you're still here, I wanted to show you, we were talking about it the other day, but TSLQ, all of these are now in the app. If you're not familiar with these folks, these are contra ETFs. Some of these even have leverage on individual stocks. They're the very first of their kind. So therefore, if you want to short stocks like Tesla or Nvidia or some of the others without having a margin account, you can buy these contra ETFs that gives you the same exposure as shorting the stock. So something very, very new here, a new type of ETF. So as always, with something that's brand new, a new instrument to trade, be careful with it. Know that there's probably a lot more risk since, they haven't been done before. So trade at your own risk, but, if you're interested in them, take a look. Very, very interesting trades here. Where did you find the overall top rated stocks? Bob, so what I did is I went to the stock pick ideas, and the second row down in the stock pick ideas under retirement stocks, you have overall top rated stocks. All right, let's get back to it though. Docs, DOCS. DOCS, poor long-term potential, does have a lot of risk associated with it. However, you do have a short-term uptrend. Overall, stock's about average currently. But it is a speculative trade, so be careful. Google. So we're taking a look at Google. Good long-term potential, less risk associated with it. Slight short-term uptrend. Preferably, I want to see that once again at 0.1 or 1.1 or higher. Doesn't meet my criteria, but overall the stock is favorable. I need to see that timing pick up a little bit more though. HUT, good long-term potential, but it has a lot of risk associated with it. You're in a steady decline. Overall, stock is not favorable here. CHPT. Poor long-term potential. It does have a lot of risk associated with it. However, you are in a really strong short-term uptrend, so overall, the stock is favorable. If you're a speculative trader, knock your socks off with this one. And as always, just as a side note, if you're not a VectorVest subscriber and you want to get the same analysis when we're not live, you can always click on the link down in the description below, sign up for the 2-week free trial, and put it to the test. Seeing is believing. And you can do this same type of analysis anywhere you're at on the go at any time. So if you're already a subscriber, just simply use, or you can pull up the app wherever you're at. But if you're not, click on the link down below, sign up for the 2-week free trial, and put it to the test yourself. All right, Plug, PLUG. Looking at Plug, poor long-term potential, a lot of risk associated with it. However, you do have a really strong short-term uptrend. Overall, stock is favorable currently. BLNK. Once again, a speculative stock that has poor long-term potential, a lot of risk associated with it, but it's a momentum trade right now. 1.58 on the RT, really strong short-term uptrend. So overall, stock is favorable currently. GFF, good long-term potential, less risk associated with it. It's in a slight uptrend on the short-term basis, so overall, stock is favorable. SIGA, we talked about that. LPLA, that's one that we haven't seen recently, but it's been one we've kept an eye on. This one has good long-term potential, less risk associated with it, nice steady short-term uptrend, so overall, stock is favorable. Enphase, Enphase, poor long-term potential, but does have less risk associated with it compared to the average stock out there. Look at that timing, 2.0, man. This thing is on fire here today. Steadily moving higher, rocketing up higher here. Overall, stock is definitely favorable. This is one I had, I believe, in my my picks from last week's AMA that we did on Wednesday, and nailed earnings, beat expectations, no surprise, taken off again. I like seeing that. Hopefully, you guys are making some money with that one. DOCU. Poor long-term potential, a lot of risk associated with it. You're in a steady decline. Overall, stock is not favorable. This one is moving in the exact opposite direction we typically prefer to see. It's going from top left to bottom right. We want to see bottom left to upper right. All right, RMBS, we'll do a couple more here. RMBS, good long-term potential. You have less risk associated with it. You're in a nice steady uptrend, so overall, stock's definitely favorable here. AOSL. Oh. Come on. AOSL. There we go. AOSL, good long-term potential, less risk associated with it, nice steady short-term uptrend. Overall, stock is favorable. Albert's asking, Apple's Q3 report is today with a low GDP. Do you think it will drop? I mean, Apple's already been giving warnings about slowdowns in their profitability. We saw it with Google. We've seen it with Facebook now. I think, that's the current trend that we're noticing is, they had such high growth a year ago coming out of the pandemic that it's going to be hard to compete with those numbers. And especially with lockdowns still going on in China, which is messed up with the supply chain, also slow down potential purchasing from the second largest economy. They could definitely report weaker sales and weaker numbers, but keep in mind, Apple isn't going anywhere. Apple holds more or has more cash on hand than the US government does. So, yes, that they may report negative earnings. They may have a bad earnings report. They may give some negative forecast or some, some downtrodden forecast going forward. But, overall, long term, Apple's still a great stock. But short term, yeah, it may have some pullbacks there, but at the same time, that could create good buying opportunities. Or I could be completely wrong. They report horrible earnings, and then all of a sudden they take off like we saw with Google. So, there's that as well. Depends on the guidance, I think, is what's going to really drive Apple's price higher or lower. Let's see, DRN. So the real estate bull ETF. With an ETF, as always, the RV, RS are always going to be pegged at 1. They don't have financial statements, therefore, all you need to focus on is the RT. At 1.28, it's in a steady uptrend, so therefore, it is favorable at the time. Jay, they don't have a ticker that we can trade on, so unfortunately, I can't analyze that one. Let's see, CCJ. I'll do 2 more here, and then we'll start wrapping it up. So with CCJ, average long-term potential. It has more risk associated with it. You're in a slight uptrend. Overall, stock's about average at best. VST, and we'll do this one and one more here. So VST, good long-term potential. You have more risk associated with that long-term potential, however. You're basically moving sideways on a short-term basis. Overall, the stock's favorable, but we need to see that timing pick up. ARPL or ARLP. There we go. So ARLP, good long-term, great long-term potential actually. Less risk associated with it. Nice steady short-term uptrend. Overall, the stock is definitely favorable. If you scroll down, also, stock is undervalued currently as well. All right, so once again, if I didn't get to analyze your specific stock today, I do apologize. We had a lot of stocks coming in. But if you're already a subscriber, just simply pull up the app, sign in with the same username, password you always use. Tap on that little magnifying glass in the upper right, type in your stocks, and you can do the same analysis wherever you're at. If you're not a subscriber, click on the link down in the description below, sign up for the 2-week free trial, and you can do the same thing wherever you're at on the go at any time of the day as well. So, if I didn't get to them, you can do the same kind of thing on your own by utilizing the Stock Advisory app just like we've done here. That's the great thing about it. It's intuitive, it's simple, therefore anybody can take advantage of it, anybody can use it, and that's why we wanted to discuss the basics, make sure everybody has a strong foundation, so that way you get the most out of it no matter who you are. All right, taking a look at the major indices. Wow, man, in a matter of an hour or so, how things have changed. The Dow is now up about 0.5%. NASDAQ is up 0.4%. S&P 500 is up about 0.6%. VectorVest Composite up about 0.4%. Therefore, the market is still mildly bullish, and VectorVest advocates buying safe, undervalued stocks that are rising in price at this time. If we scroll down, we see that green light coming from the price column. We're now higher day over day and week over week. RT is now higher day over day and week over week, but we need to see the RT and buy to sell ratio cross above that level of 1 before we see those green lights showing up there. Looking at the advanced declines, the tides have changed. We're now at 51% of stocks moving higher and 37% of stocks moving lower. Not at that 2-to-1 bias yet, but definitely starting to see a stronger push for the bulls rather than the bears right now. So with that, it's been my pleasure being with you guys here today. As always, if you want to see more of us, come back around 2 p.m. Eastern, where we have my colleague Glenn Tompkins talking about what's hot, what's not, what news is driving this market currently with his Trending Thursday. So if you want to see all the news that's impacting the markets, come hang out with him at 2 p.m. Eastern today, once again on our Facebook and our YouTube page. So all that, thank you all for hanging out with me today. If you haven't already, smash that like button so that way it shows support for the channel, helps us out with the YouTube algorithms. All of that helps us continue to grow this awesome community that we built here. So thank you all. Have a great rest of your trading day. Be safe out there. Have a great weekend. And until next time, take care, adios, and toodles.